Hi, Ayushi. Thank you so much for joining us on the That One Idea podcast series that we run here at WaterBridge. When we first started this podcast series 3 years ago, our idea really was to have conversations with what we like to call founders. We love founders. We've missed funding as well. Thank you so much and welcome to the podcast.
Thank you so much, Anjali, for having me. Very excited to be here.
Absolutely looking forward to the next 30, 40 minutes, unraveling the backstory to starting up. And with that, if I can take you all the way back to where you were born and raised. And what I love asking founders is who or what influenced you the most growing up? It could be a person, it could be an event, it could be even a key milestone. But curious to know what your childhood influences were.
Um, yeah, that's a very interesting question. I was born and brought up in Delhi itself. My father is actually an ENT surgeon, and my mom is a lawyer in the Delhi High Court and Supreme Court. I've had a very simple, honest childhood, enjoyed my growing up years. Two sisters and self-made independent parents. So I actually would give the entire credit to who I am to the upbringing that my parents have had. Parents, like from a typical middle class family, parents had to establish themselves. They were both building their careers as we were growing up, and so we've seen them through the in and out and the struggles that they have faced. It was but natural for both me and my younger sister to believe that we have to grow up as independent women. It was never a question that there would be some inheritance or any of that waiting for you. So I would say significantly influenced naturally a lot by parents. And the other part, which is very interesting as I reflect back in my journey, is um, the the confidence with which our parents brought us up, and also taught us to be a go-getter and never think about gender in our entire lives, is a very interesting way. We've never been brought up as two women or two girls. It was always about anything and everything that we wanted. And interestingly, therefore, I've always grown up believing I don't care. Like, I've never ever in my entire career cared about my gender, or believed that gender has held me back in any way. And our parents were pushy on academics. They would strive for the best and want us to be the best. And I think both of us, therefore, graduated from the top East schools, from the best engineering colleges in the country, and then moved on. So I would honestly give a lot of credit to my parents, both mother and father, for having a very forward-looking upbringing for us, and protecting us from the difficulties in the world, which allowed us to therefore grow up in a very optimistic mindset, and a mindset where we believe that we can conquer the world.
No, fantastic. Thank you for sharing that. And you've often said in other public forums that you are a high opportunity cost professional. You've graduated from like top colleges. And for you, starting Fable Street and now FS Life was like a very personal problem statement that you faced as you were, I would say like a global citizen working with McKinsey and just couldn't find clothes that fit well. How do you take a business from an idea in your head to actually get off the ground? And what were those few months like when you had taken the decision of quitting and starting what was then Fable Street? And take us through how you did market sizing or what actually led you to flying off your perch.
I think it's a very interesting overall journey, right? I've been a consultant at McKinsey for all my prior lives. We were taught to find the best of the best answer and always dream about the best answer. And then there is also a journey of building a startup and execution. So for me, while the problem that I associated with was something that I could reflect back on and I was passionate about, because sizing for Indian women, me being a professional uh, person, would never find any great fit. All of those were critical ways where things I wanted to be focused on, and I wanted to focus the business on. But the larger part still was that the question whether this is a business that can be big and scaled, and can I
Mm.
really create impact. So that was the first honest decision point for me, before I jumped into saying this, right? There is passion and everything, love aside, but it has to make business sense.
Yeah.
And as I said, I am a dreamer. So I did not want to not build a business which I believe doesn't have multi-billion dollar potential. So I actually did a full-fledged B plan. I fully understood the entire industry across the globe to believe that this can be a huge business opportunity apart from my interest and passion saying कि मुझे अपने लिए कपड़े चाहिए.
Mm. Mm.
Right. And once I got that comfort, that's when I realized that there is a great opportunity to build something big in this space. And that's how I jumped into doing FableStreet back then, and now it is called FS Life. The other very interesting anecdote, which I share a little bit, is that you before you jump between leaving the job or make up your mind that you want to leave your job and then start doing this, right? The process is so thoughtful and very pros and cons. ये ठीक है, ये नहीं है, क्यों करें, क्यों ना करें, opportunity cost, as you spoke about, right? Like you leave such a cushion job, you have a great assistant, you're flying business class, beautiful things, right? And then jumping into this execution.
Yeah.
And by the way, no one knows, okay?
Yeah.
I'm telling you, ki had I known what it would have meant, I may not have done it.
Yeah.
It's hard. It's
Yeah.
absolutely unreal, but no one can visualize it until they do it. It is only glamour from the outside. But I think the interesting clincher in me doing this was I always laugh at it, but the movie Zindagi Na Milegi Dobara released. And then you realize that genuinely, if you don't give it a shot now, you are probably not going to get an opportunity in the future. And if you think hard, right, while it feels that you have a very high opportunity cost, right, about it, but if you think about it, you also think that we are all people who are doing it in a very risk free manner. For
Yeah.
me, I can always find a job. So if I actually think of doing and starting up saying that hey, let me give it a shot for 3 to 4 years and
Mm.
see where it goes, and stop looking at opportunity cost but start looking at NPV, which is your net present value, it wouldn't matter. In the long run, we all get what we deserve and we'll all make significant amount of money. It is only the short term cash flow which can impact you, but not something that your long term wealth will be impacted. If we start thinking like this, I actually feel that there is no opportunity cost of people like us jumping into a startup world and trying to take your do your hands and get your hands dirty with the business. And then I went through the usual run and grit of the process, making a B plan, doing the execution, going through the journey of each and every best in class business models, defining my business model, and then actually going and interning in an export house to learn the tricks of the trade, to know
Mm.
how a garment is built. Then only I could build it, and there was a vision around what I wanted on the product, and then actually launching. So there was almost about a year of R&D effort that went into building FableStreet before we went ahead and launched it,
Yeah.
and a little bit of a journey of raising seed capital at the
Yeah.
same time in parallel.
And as you got the business off the ground from day zero, and I've been one of your biggest fans and earliest customers, you've always had this difference about fit and size and being the perfect fit, right? One question really is, why is it important to have this core differentiation? Because from the outside, it might seem like just another, say Western wear brand or workwear brand. But from the very beginning, you had this core differentiation that we are the best brand when it
Yes.
comes to fit for Indian bodies. So take us to that process of why A, that's important, but B, and more importantly, you have sustained that differentiation till date. That is your key
Yeah.
USP as a brand. Yeah.
So, I mean, I think for any good business, one thing you will realize is that product market fit is crucial. And for every startup or any business, you need to identify what your product is and how is it differentiated. But in apparel, right, if your product is not differentiated, and B, I would say now in this world called not relevant, you're not going to last. And
Mm.
that's extremely important from a long term longevity. Startup and VC money, all of this can give you a boost on accelerating scale. But until you get repeats, until you get true product and brand love, you can't build a long term sustainable business. And the first point on my investor pitch deck, which is what I made in 2015, and today the same slide is my first slide. And the first thing that says is that, product has to be distinctive and relevant. And in
Mm.
our case, if we had to do the same, and if you understand Western wear and apparel, the core unmet need for Western wear over last 15 years in the country has been sizing for Indian women, because all the Western wear comes internationally, and Indian women are different in shape and sizes,
Yeah.
and we are forcefully fitting ourselves into those.
Yeah.
So that is how we identified and narrowed on saying that sizing is going to be a core differentiator, and we've held on to that narrative in the journey. It's stuck on because it's interesting that no one has caught up to focus on
Yeah.
sizing for Indian women in the course of the journey. We may have
Yeah.
changed the narrative over the course of years had we felt that it's become a hygiene now, but even till date, fits for Indian bodies is not a hygiene, and no brands are focusing on that. The
Yeah.
second thing I would like to add over here is that we underestimate the importance of consumer feelings, which is what matters the most, right? The reason we all wear apparel and why fit matters is that you get that extra edge of confidence in you, that you're looking nice and great. And we are all used to seeing great clothes and garments on that extra small body, but not even a single woman in my friend circle across would be that extra small body that you see on models. We are all
Yeah.
real people, and if we just manage to just get that fit right, it gives that extra edge and the confidence boost in your head that you're looking nice. And that's the objective. So we are actually genuinely trying to make real women feel beautiful and confident about themselves, and the core unmet need to address that, we believe, is fits for Indian women, and that's what we're focused on.
Yeah. Now, I was going to lead you to the next question in terms of how do you translate your vision as a founder to the investor pitch deck, and as you sought out to raise your first round of institutional capital back in 2019, give us a sneak peek into what those conversations were like immediately after your first institutional raise.
I think what all investors are looking for, clear clarity on what differentiates you, why there is a huge market, and how you as a founder are going to deliver it differentiatedly, or the right manner, right? And each investor will go through their journey of figuring that answer out. What's very interesting is that this answer has been well said enough number of times, so
Yeah.
that's nothing big and new. But we get so driven by our passion ki mera business best hai, that we don't look at things and assess our business from an investor point of view, but literally, how good is the founder at execution? Is there a
Mhm.
big market opportunity? And is there a sound business plan? These are three things at least any investor at the seed and the Series A stage looks for, and then the prioritization changes over time. I had a very clear vision, and that's the logic with which I went in through the engagement and conversations across the investors to raise my first round, and both institutional funding as well. What did work very well in that process was two things. I would say that I think I did have enough pedigree and understanding of the business, which worked in my favor, including I had invested my own personal savings to build the product before I went in to start raising the seed round. That worked well. What was hard, interestingly, was the core product, the market investors understood, right? But the differentiator, because most of the investors are men, very hard for them to understand the core need, why sizing is the most important and the most unmet
Yeah.
need, right, from a consumer perspective. Beyond a point of verbal communication, right, how will you go and explain it to them?
Yeah.
And what's the easiest now is if they, some of their people in their circle, friend circle, women or their wives across, when they choose us and they hear about us, now it's a lot more easier. But when you're raising the first round, when you're pre-launch, right, that is the time when it becomes a tad bit confusing or unsure around that.
And now, beyond to becoming actually a VC funded company, what were the big things that changed for you? Would love to understand what the first few board conversations were like. What were the key North Star metrics that you started tracking as a seed stage company?
When you have a formal board, it becomes a little bit more important to be more structured about your planning, your cycles, your business, etc. And also, it forces you as a founder to become more systematic about looking at all your metrics, which sometimes, when in your seed stage, you are just jumping from one place to another. There is no formal review ki monthly ek review hoga, nahi hoga, right? So you put in some of those board conversations around this. They work very well because it allows the founder who's hustling in depth, right, it forces them to step back. So an external pressure a little bit works very, very well. I think that's one. The board conversations in the first couple of months, when you're moving from your seed stage to Series A, are most of the times driven still towards getting the product market fit right, or being very, very clear around that moat is working, because that is the time when you're trying to scale that up. You would have usually used initial seed stage money to get the product in, and then early stages of scale, right? But then the future path to scale. So a lot more on consistently ensuring the product is moat is correct. You don't slip on quality across the scale up journey, and that is where the focus consistently stays around this. And then the second area, which is important, and at least I remember most of my board conversations were consistently around getting the right team in place, and hiring for the right team. I would say a Series A is still a 10 to 100 journey, if not a 0 to 1 journey. And even in a 0 to 1 journey, you will not have your top leadership all the time in place, because founder is doing majority of the work. So you need to start focusing on building a little bit more of the right leadership across. And you are literally tracking and figuring out the right team members, the right structure. First couple of months were primarily on those lines, right? So North Star metrics were actually not saying dhanda kahan ja raha hai, because I think that they're clear that that is when they've invested, but it is literally a lot of input metrics coming tightly in place. And I would also give credit to the backing we've had from Fireside, that they are quite focused a lot more on input metrics at the early stages, as opposed to all the time chasing output metrics. We were also a little bit like a COVID child, so that also prevented a lot more on the output pressure, because we were going through a full process. Like we had raised within 3 months of raising our Series A is when we entered into COVID. So it was a completely different journey for us.
Yeah. And you briefly touched upon hiring as one of the first things you stalled for. One of the questions we most often get asked is, what are the hiring playbooks, and maybe even do's and don'ts and mistakes. Typically, do you hire, say, department leaders first and they build teams under them? Do you hire from competition? Do you hire generalists, domain experts? While there are no right and wrong answers, I understand, would love to know what worked for you in the early days and as you scaled up all the way in the last 6 years.
So, a couple of thoughts that work things that work very well for us and around this. Number one is that you, of course, have to hire all your hires. And in the first 2 to 3 years of business, unless you've scaled drastically, you are the salesperson and spokesperson of your business. So you have to be able to be convincing enough why someone should join you, because otherwise great talent will not directly come to you, right? I think there is a level of uncertainty. Like in 2016, FableStreet wasn't that well known that everyone will say, let me apply to FableStreet. Today, it is a lot more easier. People are excited to join us, right? So you have to be comfortable selling yourself, but also being your true self to the people you get. I think that's one. The second thing I would say is that in the early years, and I would say even a little bit post Series A, you should focus on people who are clearly want to drive the business. So drive is the biggest metric, which I, by the way, still believe is today, because every stage is an early stage, I would say. But, drive, the hustling mentality, and strong problem solving with understanding of execution are critical metrics that I would always look at, when I would try to hire across in the early few years. And by that logic, generalist, as you said, versus the domain expert will be a little bit of a lot more preference around this. Most of the times, in any case, when you're trying to do something new, you are looking at some aspect of the industry which is working today, and you want to change that business model and unlock it. So rather than so you need the mindset of questioning and re-questioning why you are doing what you're doing. And that's not something that comes directly through a domain expert, because they're used to looking at a particular domain in a particular way. So best answer is if you can get a mix of generalists or domain experts. But if there is a prioritization, I would always say in the early stages, focus a lot more on hiring the generalist, and and people who also have done a 0 to 1 journey, because it's genuinely hard, right? मतलब मुझे तो अभी तक याद है कि मैं
Mm,
अपने ऑफिस का लॉक खुद खोलती थी, डोर बंद करती थी, to
mm,
doing like a lot of things, right?
mm,
So
mm,
you need to
mm.
have people who are very comfortable getting their hands dirty and pick up multiple things, because you
Yeah.
will allocate multiple roles across. So that's the framing. And then the last thing, which in the hindsight it was subconscious but really worked very well in the journey of FableStreet and building a strong org with great culture, was that I hired intuitively a lot of people who had same values. They were very, very
Mm,
different from me as an individual, but we had core underlying values which were very similar in nature. And that's what's worked very, very well for us in the journey. And today, almost 7 years in, we have an organization with great culture. It is a space where women feel safe, people love working here, and that's happened a lot more because I think that's who I hired and what I hired, right? So if there was a disconnect, there was no good vibes,
mm.
probably wouldn't hire all of those people, right? Like sometimes someone will be a great fit on paper and even structurally, right? But you don't have common values. We allowed that person to go on,
Yeah.
move on in separate role, and I think that's worked really well. As early stage founders, we don't even know that, and we don't pay heed to that at all. And nor was I doing it, but I was
Mm,
subconsciously looking for that, whether I would like to work with this person. And
yeah.
that is the journey that I ended up building, and which really paid us very, very well. And now it's a core pillar of how I look at hiring today.
That's a fantastic tip to founders in terms of does your value system match? And that was even harder during the pandemic. And you did briefly allude to the fact that within the first few months of raising from Fireside, the national lockdown hit in 2020. And at that point of time, as a women's, workwear, your primary positioning being a workwear brand, you literally had to take a step back and think through what next. You launched this range called like Living In, and like what 4 years later, it's hard to believe, by the way, the pandemic was almost 4 years ago. It's very much a core part of your collection. It remains like a best-selling collection. So clearly for you, it wasn't like a flash in the pan idea just to get back up. In hindsight, if I ask you to relive those first few weeks and months in the run up to this launch, and even what your thought process was, and how will you redefine workwear for women now looking to work from home?
So I think it's very interesting, but we also went through the same thing that anyone went through. It was, as a founder, I was going through COVID for the first time ever in my life,
Yeah.
right? So I also didn't know how to run and react. But I have built the business on the core building blocks of what is right to win in apparel. And in that context, we have built a very strong and robust supply chain, which is just in time and builds up inventory in a 15-day period, as opposed to most of the brands, which would do 4 months, 6 months. We have a 15-day product development cycle as opposed to a very long cycle for majority of the brands. And those are like fundamentals aspects of business that we had built, and we were always operating on lean inventory, and we had a strong team, right? Eventually when it came and COVID started, right, I think all the building blocks were put to test together for us. And fortunately, but because the building blocks were strong, so I would also give the credit to the team, like because they came together, we built it very well. So we pretty much also were on our feet, jumping up and running back. We were, while LivIn Pants is one of the core parts that stayed, but we were actually introducing new products which were relevant for work from home consistently in and out. And we were scaling the business up when all the other brands were liquidating their entire inventory, because all of that had become irrelevant. And that almost lasted, if you remember, for more than 15 to
Yeah.
18 months. So, and we were selling non-discounting, making relevance products for the consumers, and that's been the journey. In that process, LivIn was conceptualized because we pretty much realized that after being at home for 6 months, no one wanted to wear jeans or
Yeah.
the fitted work pants as much anymore, and we really need to make pants which are as comfortable as a yoga pant, but at the same time relevant, people can wear in an outdoor setting as and when they woke up. And that's how the live-in as a conversation was conceptualized. It is called live-in because we want to live in
Yeah.
them, and I
Yeah.
still date wear them to gym and also to office. I'm wearing one right now. And once we launched it, we realized that it's a great trend that we've picked up on, and then it stayed.
Mm.
So that's been the journey for LivIn, and then we have scaled that up. By the way, as you rightly said, it contributes today to about 18% of the business, which is not trivial. It's
Yeah.
huge, and it's pure play select set of bottoms,
Mm.
right? So,
Mm.
so that's the win. But we are consistently on the lookout for the next relevant and comfortable consumer product, and that's the way we look at bringing and building in products and winning around them. What we've also
Yeah.
learned is that if people get what they want, you get the fit right. Livin has been a journey where people would own all colors of them, and they've
Mm.
stopped wearing any other external trousers. So that's kind of the journey for Livin that's been for most of the consumers.
And you spoke about this, the agility that you've built back end and supply chain and the entire from design to delivery process. And you're in a business where trends like make or break you. And this entire process from ideation and strategy to execution and go live. What has been your approach in terms of reading some of these customer trends? I know hindsight is always 2020, whether it was your decision to be the perfect fit and the entire positioning around tailored pants to begin with, and then say that we'll have extended sizes, plus sizes, no matter what your body type or shape is. This is the best fit that you'll get in the market to live in pants during the pandemic. You seem to have always got this right. So what has your
Yes.
strategy been in the back end? Typically, do you follow gut instinct, internal? Do you run a lot of pilots, do a lot of testing groups, customer surveys? But how have you built this up in the back end in terms of the ability to keep staying ahead and catching these trends early, if I may?
So, I would say that apparel as a sector, and especially when it comes to women's wear, right? I think there is nothing called as, permanent trend. It's always trendy, etc. So the core to building the business was an organizational capability that was critical for us to develop, which is to be able to do design to launch in 2 weeks time frame, and then do a very short time frame inventory build up. So at no point in time you're
Mm.
sitting on inventory, and if your experiment wins, you scale. If your experiment fails, you don't lose anything. Like, if you just think about it logically, it is very easy to say it, but it is building a strong organizational capability which can deliver this through and through is what you need to do. We had to build it the hard way, because for me it was a building block and a core premise of how we run the business, and that was the framing. And while we see all the successes, there have been some small failures as well in the journey, but because they were not big and they were always we were not sitting on random inventory, so we never really lost much. And that is how the process in part around this is. Also, finally, I would say, in terms of identifying the trends ahead, we actually look at a lot more data centric and customer research orientation in building the trends ahead. We are actually not trend builders. I would say we are trend followers, but we convert that trend into a lot more wearable fashion and bring in the elements of great fit and comfort towards it. And that is the mindset we do. So that's why we are not a fast fashion brand. What you see, on Instagram tomorrow, you will not see FableStreet or FS Live bringing that on. We will take a couple of weeks to assimilate that trend, map customer need over it, and believe that unless we can't do it better and address a clear unmet need, we are not going to pick that trend up. So that is the framing we do. So it is a little bit, I would say, intuitive,
Mm.
significantly data driven, and then third would be significantly customer feedback backed, because they are the real consumers and they literally give us very nuanced feedback, how the elastic of the band did not work, those kinds of feedback, right? And I think if you pay heed to it, while it's feedback from one person, it solves an issue of 20,000 pieces for you. So that's how
Mm.
we operate.
Mm. No, very interesting. And we spoke about the back end and the design and the inventory building. Just moving on to the distribution front of things. I know you've, at the time of your Series B and when you announced your pre-Series B, you said that you will start offline stores, and today you're a multi-channel, omni-channel brand. Different D2C founders have different scale playbooks as to when's the right time to go from your own site to marketplaces to offline. What has worked for you, and what was your decision to start offline? And keen to just understand what types of customers come to which of these
Sure.
segments and how each channel is helping the overall scale and, better customer understanding as well. Yeah.
I started the business in 2017 when online was still cheaper to build and run than offline. Um, and the belief was that your own channel will help you build the brand. So at that point in time, the relevant strategy and the core strategy we had taken was that we are going to use our own website to get a product market fit right, brand.com, and also build brand in the relevant early adopters consumers. Once we have a minimum scale is when we actually use alternate channels like marketplaces, Myntra, Jabong, that existed back then, in multiple places to scale that up. And finally, we also believe that offline, and this is back in 2016 when I was chatting, we were very clear that offline will be a critical channel for us at some point in time in future. It was never, the word D2C was never really conceptualized back in 2016. It never existed. So for me, FableStreet and the journey of building FS Life is building brands the traditional way, in a very brand focused manner where product has to be the king and you are building a brand which is focused on consumer unmet needs. We started online as the primary channel on brand.com first because it was the cheapest channel to explore, and marketplaces became the secondary channels. And offline, by the way, we opened our first offline store in February 2020, back before offline was a rage. That's a different thing that COVID happened, but we were that sure. We were probably, sub 10 crores annual run rate when we opened our first offline store. But that was the clarity that we knew that brand has to be channel agnostic, and that is the journey you need to take. So that's been the mindset and strategy. And then we paused on the offline expansion given COVID had happened, and we have restarted the offline expansion 6 months ago. And that's the journey, but that's the thought process. Coming to quickly to answer your question, I would say online D2C, your own channel, attracts early adopters who are more experimental consumers to come in on you, and they genuinely believe in the power of the brand. And that's the kind of consumers we have built and faced around it. And therefore, D2C or our own channel is a most important platform for us usually. The marketplaces over time have evolved a lot, but they focus less on brand and more between discounting around this. It works very well, and it worked very well for us when we went on marketplaces because brand was significantly built, so which allowed us to play a significant non-discounted journey on marketplaces as well. And that's a journey, but they do help in very fast access and scale, which you cannot in today's world leverage your own brand.com to do, given that marketing has become extremely expensive in the world today. Offline is a beautiful channel. Back in the world when we believe offline is very expensive, today it is easiest to achieve a break even and faster funnel if you are in the offline space, if you have the right product and the right brand supporting it. And therefore offline, the consumers are very different. They are looking for immediate satisfaction and comfort, so they will buy there and then. No one is asking for discounts. The order values are double, so it's a great channel if you find the right fit in that, right? I think. And then overall we have to build the brand across all these three channels. Today they are critical. Scaling up offline is of course store by store and capex by capex investment, so it does take time, and you cannot go wrong on every decision of every location. So it will be slower, but in today's world probably more robust.
Yeah, I think I'm just going to ask another question on the multi-brand strategy. And as you move to jewelry, as well as with modern Indian silhouettes with pink fort, just your decision to choose multiple brands over keeping it all within FableStreet. Any thought process behind that? Yeah.
So overall, the decision to do more than one brand was a lot more because we believe that brand building takes time and each brand has to go through its own journey. And as an organization and me as a founder, we were hungry for a lot more. And organizationally, we were capable to delivering a lot more brands than just one brand. And we didn't want to kill this brand by saying that this brand will take X to 10X could be a 5-year journey, but we are more hungry. So can we build more brands? That was a larger logic for us to look at multiple brands. And that's why we ventured into each of these spaces which have opportunity for building large scale brands upwards of 1,000 crores. That's our approach to deciding whether we want to build a brand in
Mm,
that space or not.
mm.
The reason to do both jewelry and Pinkford outside of FableStreet is because FableStreet today is actually no more workwear, but an entire Western wear as a category brand. And that's what we do at FableStreet. Indian wear is treated distinctly than Western wear, and consumers will. There is no brand that exists which does both, right? So to
Yeah,
avoid confusing the consumers, right? So we would I would say that our decision to pick up brands and the spaces have been basis how the industry perceives that space and the sector. So like if in Western wear brand, you're happy buying, a top and a jacket or a trouser, and even probably I would say sometimes even shoes in the same brand. That's how Western wear brands have run. When it comes to Indian wear or modern Indian wear, you actually have even separate brands that you go to when it is an occasion versus when it is an everyday Indian wear,
yeah,
because that's a different market. So trying to put all of that will basically mean killing Fable Street and also
yeah.
not being able to build other brands. So it just makes strategic sense to pick up a separate brand and then build it in that category. And that is also why jewelry, I would say, is a separate category, because March is a silver jewelry brand and has a very different and independent potential and has a different TG. So they need to be looked at separately.
Very, very well said. And just coming back to your own journey as a founder from seed now to pre-series B and almost 7 years as a founder and a CEO, what has changed for you the most? And generally as a founder, where does one have to scale up as a leader? How is your own founder scalability index shaped through this journey?
It is a one-time journey, and I have learned so much that it is unbelievable. It's a journey of hardship, but then every time I question why am I doing it, is there anything else I would be doing it? And the answer to that is no. So that is how critical that this journey has been. I have learned through and through. I actually feel that, w- I've gone through multiple journeys, right? Professionally, I've grown so much, understanding what hardcore execution means, building a team, building your first 3 or 4 hires to about a 400 member team today, being able to lead them, different people coming from different backgrounds and skill sets, from a tailor and a helper to a IIT, IIM digital marketer, right? The team is so vast and diverse, being able to influence all of them in a manner. So it's just been a phenomenal journey. I think I've become super street smart. I have become a very hardcore hustler. I have become a good leader. And I have done it honestly. And while doing it, I stayed true to the person I am and who I wanted to be. So that's been a personally, I would say, a very, very, honest and a refreshing journey. Very hard,
Yeah.
but absolutely worth it.
Yeah, and that comes to my next question. I think there are a lot of aspects of starting something that needs to be de-glamorized. So I would say, thank you for sharing some of what you shared. In a founder's journey, as you said, beyond hardship, can also be very lonely. So I'm sure you surround yourself, therefore, with lots of people, and you spoke about how you've built your team. But beyond the team at FS Life today, take us through the kind of advisors, mentors, friends, industry experts. Just help give us a color of the network around you that is powering you and cheering you, if I may. And more importantly, how have you evolved this with time and FS Life's own business scale as well?
So, I genuinely feel that you need a lot of networks around you, and you have to build an ecosystem around you. And I'm glad that you referred to it. I've been a single founder, right? So, even more difficult because it's a fairly lonely journey across, right? You have to have, I would say, some people who you could trust with their advice significantly. And I have used my ex McKinsey mentors and over time some investor relations that I've built to be great mentors for me, which is more forward looking from a business perspective. You also need a cohort of probably your peer founders to be able to go pitch. And I have a very close set of friends who were all, my peers at my previous organization. We pretty much started up together, and that worked very, very well. I would also say that third, you need an ecosystem and a support system which is there for you as core friends and even family to support you, because otherwise it pulls you down. Entrepreneurship consumes you a lot. I mean, a lot less time for family. So they need to understand you and fully understand why you're doing what you're doing, and have to be supportive in that journey. So be it your spouse or your significant other and your parents and everyone else. So, I'm fortunate that I built that across the journey. I would also say that, I have gone with my team, and people don't pay enough importance to the team around this, because we always feel that there is a hierarchical gap. I have consistently, at least in my head, believed that my team members have been my peers, and I have been honest and bared myself enough that they can see who I am. And therefore, at some level, I would say that they've also been fairly big support system in understanding what I'm going through and where I am in the journey, and that's worked very, very well for me. But it's also who you are and how you want to build, I would say, and think about the ecosystem around me. And I think last, which is more philosophical in nature, I've been I've gone through my own personal journey and transformation of who I am while building this, right? Everyone goes through as you mature age. And for me, I've realized that I want to build it with a set of people around me who I love and respect. And I want to do it with them and not just for me. And that's the journey I want to take. So I've been conscious about it. I tell my startup friends and honestly go and tell them how much I love them and admire them. And that's who I have become as an individual.
No, fantastic. And if I ask you this from an investor relationship standpoint, and for founders listening to this podcast, looking to raise their first round of institutional venture capital, typically any do's and don'ts, and just in terms of expectation setting from what to expect as you transition into a VC funded company, and more importantly, thereafter start building investor relationships. What do you think needs myth busting over there?
I At least for me, I would say that, we have to remember that all investors are humans, and they also respect you as founders, because while there is a process of getting all investors on board and building systems, processes, and everything around it, but it is also a process that you have to recognize that they are humans. So it's not about positioning. Once the investors are on board, it's not about positioning, hey, your business is doing great all the time. Everyone knows that you will not be doing great all the time. It is not about presenting to them, but it is about problem solving with them jointly, because they also have a skin in the game. So I would say that, the natural aspect of investor relationship is about, we have a board meeting, we have to prep, and just building multiple decks and all of that. While that is important, it is important to have a very human and an honest conversation on where the business is going, what we need to fix, how we need to do it. And at least with my journey, I've been very comfortable to have that conversation, and also investors have respected that, and in fact given honest input and learnings around what is the right way to do it. So it is about building a great relationship with your investors, and understanding each another deeper, and leveraging them right for what you can get out of them. So today I would say that I would count Kaval and Dipanjan both as people who I would expect them to as mentor my business, apart from being my core investors in the business.
Yeah. And just in terms of the entire investor value add construct, take us through how they're actually like just extended partners, and how they can, add value to the business as well, and how you can actually see them as somebody you can ask help from.
See, it is also about each founder going through the journey, because when you are raising this entire persona of investors, Kia, it is so hard to get an investor, right? We start building and putting investors on a pedestal. So I would say a lot of it is also in our heads. I've also gone through that journey, right? Each know, I would say, oh my God, I have to impress this person and whatnot. And over time, when you become a honest founder and you go through the entrepreneurship
Yeah.
journey, and also realize, right, then you realize that actually investors are there because they have a skin in the game, and then they see the opportunity in the business. You also have an equal skin in the game. So expect respect from investors and respect them and build that relationship. I would say that is what you need to do. So a lot of this journey of, partnering with investors, I would say, has to actually start in your head as a founder. I am yet to come across very strong. I mean, I've come across a lot of great investors who are actually in their head open to partnering with the founder. They are not all the time evaluating the founder, they are actually excited about partnering with the founder. Especially, I would say, even angel investors. Like most of the times, I used to go to an investor believing कि वो मेरे से पूछेगा धंधा क्या चल रहा है, and his
Mm.
first question to me was, Ayushi, how are you doing? And I
Mm.
was taken aback by that question, because I always believe that my job is to update them, update them, update them. There is a process where you as a founder should demand what you want, and you should be
Yeah.
ready to be a partner with this. Set an expectation very, very clearly with your investors, and most of the investors, I would say, will be happy to enable you and support you, as opposed to saying ki mujhe ye do. And it is a
Mm.
fine balance you carve. Today I build great relationship. I give my to do's to my board and saying कि यार ये वाली तीन चार चीजें करके बता दो, and I will trust your judgment on this because you are stronger on that area than me, right? Like if you do fundraising, I'm asking them for help, saying okay, top guys, top bankers, all of
Yeah.
those, right? You tell me because you are more
Yeah.
clued into the space and I've been in the hustling. I will trust your judgment and move on. So that's how you build that a new partner, I would say. It's both sides.
Yeah. No, fantastic. And with that, let me ask you the last question really is in terms of what are you most excited about for 2024? If I have to ask you for a sneak peek in what the next few months at FS Life looks like, what can you share with us?
I think the most most simple way to say it, which a lot of founders say it at this stage, but that is the reality, is that it is still day zero. you
Okay.
know we are just doing so much more. We are going to go offline with other brands. We are scaling up the offline. We are introducing new product lines. We are still scaling the team. We pretty much like opened our new office today morning, which is what I was telling you. So there's just so much happening this year, that it still feels like day one, and there's a lot more to do, and that's what's keeping us awake and excited, I would say, for the year. And seems like it's been a good start to the year.
No, on that note, I want to say thank you so much once again for joining us. And just as a very happy and proud customer for bringing, I would say, not just color and fit, but absolute style into our otherwise boring lives. Thank you so much. More power to you. Keep marching and forging forward. And as always, we'll continue to be your, loudest, biggest, happiest cheerleader. Thank you so much. Thank you so much, Ayushi, for giving us your time, sharing your insights, and really enjoyed this absolutely honest, heartfelt conversation with you.
Thank you so much. Thank you for, making me think so much more lately, but love the chat. Look forward to see it soon.
Thank you so much. Take care.